This is Wallet Brief, where we break down what actually moved the US economy this week, without the noise. If prices, interest rates, jobs, housing, or taxes are quietly changing your money, this is where you stay informed. Let's get into what really happened this week, and what it means for your wallet. Stock market today is beginning to show signs of stabilization after a period of noticeable volatility. Markets are still moving, but the intensity of those swings appears to be easing. What's driving the stock market today is a shift in expectations. After reacting sharply to uncertainty, investors are now starting to process information more calmly. When markets move from reaction to reflection, volatility often begins to settle. The real trend behind the headline is adjustment. Investors are recalibrating their positions based on updated expectations about the economy. This doesn't mean certainty has returned, but it does suggest that markets are finding a temporary balance. For your wallet, the stock market today may start to feel less unpredictable. If you've seen rapid changes in your investment values recently, this kind of stabilization can help bring more consistency, even if movement continues. There's also a broader economic impact. When markets stabilize, businesses tend to regain some confidence. That can support more steady hiring, spending, and planning, all of which contribute to financial stability for households. At the same time, it's important to recognize that stabilization doesn't always mean a full recovery. Markets can pause before moving again, depending on new information. Looking ahead, investors will continue watching economic data and policy signals closely. If conditions remain steady, markets may continue to stabilize. If new uncertainty emerges, volatility could return. That's your wallet brief for this week. These changes don't always make headlines, but they do change how much you pay, save, and earn. We'll be back next week with